Hello and welcome to the Cryptocurrency News channel. Well, some companies, even though the SEC has not allowed the Bitcoin spot ETF, they're kind of launching like Bitcoin ETFs, but in stealth mode. That points to something that we've all known is that institutions want exposure to Bitcoin because otherwise there would be no one that actually would buy these products. They don't want a direct exposure to Bitcoin, but they want a middleman because Schwab has basically launched a crypto ETF, but in stealth mode. So basically, they launched an ETF giving investors significant cryptocurrency exposure. It's basically like looking at the companies that comprise this ETF. It's pretty much all cryptocurrency exposure. They say it's extremely speculative, which obviously it is very speculative, but it does give investors a new way to buy cryptocurrencies. So Schwab Asset Management released its Schwab Crypto Thematic ETF Fund. It's basically kind of like a Bitcoin ETF because all these companies that they actually have in the portfolio completely rely on Bitcoin for its price. It's not like that other ETF where it included like Tesla and PayPal or only companies that basically have exposure to Bitcoin. These companies actually depend on Bitcoin. So the Schwab, this is from CNBC by the way, this Schwab Crypto Thematic ETF is different than other crypto-related ETFs on the market today in the way it identifies, selects, and weighs constituents. So check out the companies that make this fund. There is MicroStrategy, which is almost 100% dependent on Bitcoin price. We all know Michael Saylor, and who is now like their, I guess, executive chairman, and his business is basically to acquire ever more crypto. Marathon Digital, which is basically crypto investing. Riot Blockchain, same thing. Coinbase, which obviously has been tanking massively because the price of Bitcoin is falling. Silvergate Capital, which is like another crypto fund. Robinhood. Robinhood is they do traditional stocks right now as well, and Interactive Brokers have holdings in the fund, unlike other crypto-related thematic products. The crypto thematic ETF, which is low cost and index design, differ from similar funds. Botset explained, the fund is the lowest cost crypto related product in the marketplace at 30 basis points. A basis point equals zero point 0.1 percentage points. So essentially it's like 0.3 percentage points. So less than half of 1%. But if you actually look at the funds that are actually in this particular fund, it's pretty much a Bitcoin ETF, except it's in stealth mode because you can't really make an ETF directly based on Bitcoin. We're just going to make an ETF based on companies that entirely depend on Bitcoin, which basically is an ETF based on Bitcoin. Obviously, it does not have the psychological effect that a Bitcoin spot ETF does, but if you actually want an ETF that's incredibly volatile and basically follows crypto almost one-to-one, this would be it. Like I said, this just shows you that there is a lot of both retail and institutional demand for exposure to crypto, but not direct exposure. I don't really know why you wouldn't want direct exposure and you would buy one of these funds, but some people actually just feel better about it this way. So yes, feel good about it. These like big brokers, they're launching really what are Bitcoin ETFs, but they're in stealth mode because they can't break the SEC's rulings. I think once you get enough of these funds out there, it'd be completely pointless to not allow a Bitcoin spot ETF, and a spot ETF will come along the line sooner or later. So that's the news for today. Let me know what you think, like and subscribe, and hit that bell notifications button. Thank you and have a nice day.